biggest talking point this morning, outcome from the two-day FOMC meeting. The central bank has held rates steady while sticking to its forecast for 3 interest rate cuts despite inflationary concerns. Now, Chairman Jerome Powell reiterated that a strong jobs market would not deter the central bank from easing. Remember, the officials have kept their benchmark rate unchanged for a 5th straight time. Chair Jerome Powell also said that surprising pickup in inflation in January and February had not fundamentally changed the Fed's picture of the economy. The central bank still expects inflation to continue to cool, though more gradually than it thought 3 months ago. Let's go across and listen in to an excerpt of the press conference.
The inflation data came in a little bit higher. We're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. That the committee needs to see more evidence to build our confidence that inflation is moving down sustainably toward our 2% goal, and we don't expect that it will be appropriate to begin to reduce rates until we're more confident that that is the case. That we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see more, and we said it would be bumpy, and now we have January and February. You know, we're looking for more good data, and we would certainly welcome it.
All right, well, that's some positive commentary coming in from Fed Chair Jerome Powell, and definitely the US markets have reacted to this commentary. Let's shift focus from US to UK. Some positive news coming in on this front as well, because UK inflation has come in lower than expectations for the month of February. Retail inflation came in at 3.4%, making it the lowest level in over 2.5 years. The fall in inflation is majorly due to cool-off in food prices, and on the back of this, FTSE closed flat yesterday, but we'll see how this inflation data impacts that index today.
And now let's also take a look at Bank of England, which is also expected to follow a similar trajectory when it comes to rate cuts. The central bank is widely expected to keep interest rates unchanged at 5.25%, but economists seem to be divided on when the first cut will come this year. The larger than expected fall in both the headline as well as core figures was welcome news for policymakers ahead of this week's interest rate decision, though the Monetary Policy Committee has so far been reluctant to offer strong guidance on the timing of its first reduction.
Alright, with that, let's shift focus to Asian markets and talk about what's happening over there, because the Asian markets are mirroring a winning Wednesday on Wall Street. Now, particularly the Japanese markets, where the Nikkei scaled yet another record high after Fed Reserve policymakers said that they still see the need for 3 interest rate cuts in 2024. Wasn't just the Nikkei, broader Topics index was also up 1.28%, also setting a new record higher by 1.4%. Nikkei as of now 1.3% higher, and a 535 point uptick as we speak.
Well, that's all about macros and markets, but let's also turn our attention to some stock-specific action then. Shares of American chip maker Micron soared 14% in after-hours trade. The up move followed a decisive beat in their second quarter earnings. Company believes that it is one of the biggest beneficiaries of the multi-year AI-led opportunity.
If you like this video, then like, share and subscribe to ET Now.